Welcome back to the Pro Ticker Podcast, your Saturday morning edition covering major financial magazine headlines. Create a long, detailed, deep dive with in-depth analysis, balanced opinions, dynamic conversation. It's been a wild week in the financial world, wouldn't you say?
It's really a lot going on.
Donald Trump's return to the political scene has really shaken things up.
Yeah, it's pretty fascinating. You see this election influencing everything from energy policy up in Canada
Yeah.
to the EV trade war between China and the EU. Even the Federal Reserve seems to be kind of adjusting its strategy
Mhm.
in light of this, unexpected political shift.
Lots to unpack. So today we're going to dive into some of the biggest financial stories of the week, helping you connect the dots and see what it all means so you can stay ahead of the curve.
Exactly. We'll look at the potential consequences of these developments, analyze different viewpoints, and give you a clear understanding of what it all means for the global economy.
Sounds good. Okay, let's jump right in. Let's start with the Bloomberg article. Alberta pushes for more oil pipelines to U.S. as Trump returns. Seems like Alberta's Premier Danielle Smith is hoping to use Trump's return to her advantage to push for more oil pipelines to the U.S.
Interesting, yeah. During his last presidency, Trump approved the Keystone XL pipeline, which of course was later canceled by President Biden. Smith's strategy seems to be banking on a potential revival of those projects under a Trump administration.
He's not wasting any time. The article says she's already talking to major pipeline companies like Enbridge and TC Energy. But there's a quote in the article that really caught my eye. She says something about the U.S. needing to rely on Canada for oil instead of Iran or Venezuela. What do you think about that? What are the implications?
It definitely suggests a potential shift in U.S. energy alliances. If the U.S. relies more on Canadian oil, that could mean less dependence on supplies from the Middle East and South America. Now, on the one hand, this could really strengthen the energy partnership between the U.S. and Canada.
Right.
But on the other hand, it could lead to some friction with those other oil-producing nations and potentially even affect global oil prices.
Yeah, you got to think about that. And of course, we can't forget about the environmental side of things. Expanding oil pipelines is always a controversial issue. It comes with significant environmental impacts that we can't ignore. Speaking of global tensions, let's move on to the Bloomberg article. China and EU reach technical consensus in EV talks, CCTV says. Seems like there might be a breakthrough in the electric vehicle trade war between China and the EU.
So it seems, after weeks of negotiations, they've managed to reach what they're calling a technical consensus, which could pave the way for an agreement on price controls and export volumes for Chinese EVs, potentially preventing a full-blown trade war.
Interesting.
It's worth noting, though, that CCTV also criticized some media reports for portraying China's proposals in a negative light. So, there's still some tension there.
So it seems like reaching a lasting agreement might still be a bit tricky. What do you think this development means for the EV market as a whole?
Well, I think it really highlights the intense competition between China and the EU for dominance in the EV industry.
For sure.
If they can come to a mutually beneficial agreement,
Right.
it could lead to a more stable global market and maybe even encourage collaboration on things like battery technology or charging infrastructure.
Yeah, I see what you mean.
But if the tensions continue to escalate, we could see more protectionist measures, which would stifle innovation and ultimately slow down the global transition to electric vehicles.
Makes sense. Okay. Let's switch gears and look at the U.S. economy and what the Federal Reserve is up to.
Yeah.
It seems like the Fed is sending some mixed signals. There's a Wall Street Journal article titled December Interest Rate Cut Isn't a Done Deal, says Boston Fed President. That suggests some uncertainty about the direction interest rates are heading in.
Yeah. It's interesting because you've got strong retail sales data, which points to a healthy economy. But then you have Boston Fed President Susan Collins, who's hesitant to commit to another rate cut in December. So it looks like the Fed is really carefully weighing the risks of inflation against the need to keep supporting economic growth.
So they're walking a tightrope. And to make things even more complicated, investor sentiment seems to be shifting. There's an article in MarketWatch titled, Investors Are Bracing for Higher for Even Longer Interest Rates. So what's driving this expectation of a higher for longer interest rate environment?
Well, the Fed's cautious stance is definitely playing a role. Investors are seeing this as a sign that the Fed might keep interest rates higher for a longer period to make sure inflation stays under control.
Right. But it also seems like there's some concern about the potential impact of Trump's economic policies. Do you think his policies could lead to higher inflation and force the Fed to keep interest rates higher?
It's definitely a possibility. Some analysts believe that Trump's policies, especially if he brings back tariffs, could have inflationary effects. This uncertainty about the economic impact of his return is definitely contributing to the volatility we're seeing in the markets.
So it's like a tug of war. The Fed trying to control inflation, and Trump's policies potentially pushing in the opposite direction. This uncertainty is definitely keeping investors on edge. Now let's shift our focus to a different economic challenge. The Bloomberg article, Germany's would-be leader, touts his recipe for a growth miracle. Talks about Friedrich Merz, who's a leading candidate to replace Chancellor Olaf Scholz, and his plan to revitalize Germany's economy.
Right. Merz is proposing a very pro-business strategy that reminds me of Germany's post-war economic miracle. His plan focuses on deregulation, tax cuts, and reduced social spending as ways to stimulate growth.
It sounds like a classic supply-side approach.
Yeah.
But do you think this strategy will work in today's economic environment? Germany faces very different challenges now compared to after World War II.
That's a really good question. Germany is dealing with an aging population, the transition to renewable energy, and increasing competition from tech giants. So implementing these policies successfully in this context could be quite difficult.
Absolutely. And we can't forget about the political realities. If Merz needs to form a coalition government, he might have to compromise on some of his ideas. And implementing these measures, especially the ones about social spending, could face a lot of public resistance.
You're absolutely right. Navigating the political landscape and building consensus will be key for Merz if he wants to put his economic plan into action effectively.
For sure.
It'll be interesting to see how he balances his economic agenda with the realities of governing. Now let's turn our attention to a sector that's been seeing a lot of activity lately, space stocks. CNBC has a really interesting article titled "Space Stocks Rally on Trump-Elon Trade," analysts say, which highlights the recent surge in space-related stocks.
Ah, yes. The Trump-Elon trade is back. Investors are betting on increased government support for the space industry under Trump, especially given his enthusiasm for the Space Force in the past, and his close relationship with SpaceX CEO Elon Musk.
Right. The article even quotes Rocket Lab CEO Peter Beck, saying he expects a very strong focus on space from the incoming Trump administration. So this optimism is definitely driving investments in publicly traded space companies.
Okay. But isn't SpaceX a private company? So does that mean investors are looking to other players in the space industry?
Exactly. While SpaceX's success has definitely boosted investor confidence in the space sector, its private status limits direct investment opportunities. So this is driving investors towards other publicly traded space companies like Rocket Lab, Virgin Galactic, and Extra Space.
So is this just investors riding a wave of hype? Or is there real potential for long-term growth in the space sector?
Well, that's the million-dollar question, isn't it? It's important to remember that the space industry is still in its early stages. There are definitely some exciting possibilities, from satellite technology and space tourism to asteroid mining and beyond. But there are also significant risks and uncertainties.
For sure. Investing in space stocks is not for the risk-averse. Let's bring things back down to earth for a moment and look at the overall market performance. The Barron's article, "Stocks Slump as S&P 500, NASDAQ Take Week on the Chin," paints a pretty volatile picture. The week started with record highs, but ended with the S&P 500 and NASDAQ having their worst weeks since September.
Yeah. This volatility is likely due to a combination of factors we've already talked about: rising bond yields, uncertainty around the Fed's plans for interest rates, and concerns about the potential impact of Trump's policies.
Right. So it seems like investors are having a hard time making sense of this complex and rapidly changing landscape. Do you think this volatility will continue?
Well, market volatility often reflects uncertainty. As we move through this period of transition and adjust the implications of Trump's return, it's likely that markets will experience some fluctuations.
Speaking of transitions, there's an interesting one happening in the tech world. Palantir Technologies, which is a data analytics software company, is moving its stock listing from the New York Stock Exchange to the NASDAQ. This is according to the Barron's article. Palantir is leaving the NYSE for the NASDAQ. Why, that's a big deal for the stock.
That's a big move. It's significant because Palantir is expected to join the NASDAQ 100 index, which includes the top 100 non-financial companies listed on the NASDAQ.
Okay.
This could attract a lot of new investors, particularly those who manage index tracking funds.
So is this a good thing for Palantir?
It definitely has the potential to increase the company's visibility and its stock price. Being included in the NASDAQ 100 often leads to increased demand for a company's shares, because funds that track the index have to buy them.
Interesting.
But Barron's also points out that Wall Street analysts are more cautious. They're concerned about Palantir's high forward earnings multiple, which suggests the stock might be overvalued.
So it's like a classic Wall Street versus Main Street situation. Retail investors seem excited about Palantir's prospects, while analysts are more skeptical. It'll be interesting to see how this plays out.
Absolutely. It highlights the importance of doing your research and understanding a company's fundamentals before making any investment decisions. Now let's shift our focus to a major development in the retail sector. CNBC has an article titled, "Why Home Depot Made an $18.25 billion bet on the Pro Business." It analyzes Home Depot's recent acquisition of SRS Distribution, which specializes in selling supplies to professionals in the roofing, pool, and landscaping industries.
Wow. That's a huge investment, especially considering the current economic climate.
Yeah.
What's the reasoning behind such a bold move?
Well, essentially, Home Depot is hedging its bets. They're recognizing a shift in consumer behavior with the DIY market softening in recent months, likely due to economic concerns and rising interest rates.
So are they banking on the professional contractor market being
Right.
less affected by economic downturns?
Exactly. Professionals need supplies no matter what the economy is doing. Roofs still need repairs. Pools still need to be built, regardless of interest rates. By acquiring SRS Distribution, Home Depot gains access to a huge network of professional contractors and expands its product offerings, essentially tapping into a more stable revenue stream.
So it's a strategic move to diversify their customer base
Right.
and rely less on the DIY market, which can be more unpredictable. It'll be interesting to see how this acquisition impacts their bottom line in the long run.
Definitely. It shows how Home Depot is being proactive in adapting to changing market dynamics. Now, before we wrap up our deep dive, I wanted to touch on a recurring theme we've seen throughout our discussion, the impact of Donald Trump's return to the political scene.
Yeah, it's clear that his return has brought a lot of uncertainty to the global economy, from energy policy to trade relations and even the Fed's decisions. His presence is being felt everywhere.
And this uncertainty is showing up as market volatility, investor anxiety, and a sense of cautious anticipation. Some see opportunity in this new landscape, while others are worried about the potential risks.
It's a reminder that we live in a very interconnected world, where political events can have a huge impact on the global economy. Understanding these connections and anticipating potential ripple effects is crucial for navigating the financial markets effectively.
Absolutely. It's not just about understanding the headlines, but also about analyzing the underlying trends and thinking about how these events might shape the future.
It feels like we've covered a lot of ground today. From oil pipelines and electric vehicles to space stocks and the Federal Reserve, it's been quite a journey through the world of finance. And we've seen how seemingly unrelated events, like a political election or a tech company switching stock exchanges, can have interconnected impacts on the market.
It really emphasizes how important it is to stay informed and adaptable.
Absolutely. So as we wrap up this week's deep dive, is there any final takeaway you'd like to leave our listeners with?
I think the biggest takeaway is that we're in a period of heightened uncertainty right now. Trump's return to the White House has created a dynamic and unpredictable environment. His policies and their potential effects on the global economy are still mostly unknown. And that's making investors cautious.
That's a great point. Maybe it's a good time to be a bit more conservative with investments
Yeah.
and really do your homework before making any big decisions.
I agree. It's crucial to diversify your portfolio. Stay informed about what's happening globally and be prepared for potential ups and downs in the market.
It sounds like the key to navigating this uncertain terrain is to stay adaptable, keep a close eye on the markets, and maybe have some antacid on hand for those volatile days.
That's a good strategy. Remember that volatility can create opportunities as well as risks. It's all about staying informed and making smart decisions.
Well said. Thank you for joining us today for this deep dive into the week's financial headlines. We'll see you all tomorrow morning with new headlines from major financials magazines.
Yeah, it'll be fascinating to see how that all unfolds. But for now, let's switch gears a bit and look at what's happening with overall market performance.
Sounds good. I was just reading the Barron's article. Stocks slump as S&P 500, NASDAQ take week on the chin. And it paints a pretty volatile picture. The week started out strong with record highs, but by the end, the S&P 500 and NASDAQ had their worst week since September.
Yeah, it was a bit of a roller coaster. This volatility is likely due to a few things we've already discussed: rising bond yields, the uncertainty surrounding the Fed's rate cut trajectory, and, of course, the apprehension about how Trump's policies might impact things.
It's a lot to process. It seems like investors are having a tough time navigating this complex and rapidly changing landscape. Do you think this volatility is going to stick around for a while?
Well, market volatility often goes hand in hand with uncertainty. So as we move through this period of transition and everyone adjusts to the implications of Trump's return, it's likely that we'll continue to see some fluctuations in the markets.
That makes sense. Speaking of transitions,
Uh-huh.
there's a pretty interesting one happening in the tech world right now. Palantir Technologies, a data analytics software company, is moving its stock listing from the New York Stock Exchange to the NASDAQ. There's an article in Barron's about it. Palantir is leaving the NYSE for the NASDAQ. Why? That's a big deal for the stock.
Oh, yeah, I saw that. That's a significant move. Palantir is expected to join the NASDAQ 100 index, which is made up of the top 100 non-financial companies listed on the NASDAQ.
Right.
This could bring in a wave of new investors,
Yeah.
especially those who manage index tracking funds.
So is this a positive development for Palantir?
It definitely has the potential to boost their visibility and their stock price. When a company joins the NASDAQ 100, it often leads to higher demand for their shares because funds that track the index are required to buy them.
Interesting.
However, Barron's also points out that Wall Street analysts are a bit more cautious about it. They cite Palantir's high forward earnings multiple, suggesting that the stock might be overvalued.
So we've got the classic Wall Street versus Main Street scenario. Retail investors seem optimistic about Palantir's future, while the analysts are more skeptical.
It'll be interesting to see how it all plays out.
For sure.
This whole situation just highlights how important it is to do your research. You need to really understand a company's fundamentals before making any investment decisions.
Couldn't agree more. Now let's switch gears again and talk about a major development in the retail sector.
Okay.
CNBC has an article called Why Home Depot Made an $18.25 billion bet on the Pro Business. It's about Home Depot's acquisition of SRS Distribution, a company that focuses on selling supplies to professionals in the roofing, pool,
Yeah.
and landscaping industries.
Wow, that's a big move.
That's a massive investment, especially considering the current economic climate. What do you think is behind this bold move?
It seems like Home Depot is hedging their bets a bit. They're recognizing that consumer behavior is shifting with the DIY market softening in recent months, probably due to economic concerns and those rising interest rates we talked about.
So are they betting on the professional contractor market being a bit more resilient during economic downturns?
Exactly. Professionals need supplies no matter what's happening with the economy. Roofs still need to be repaired. Pools still need to be built. Interest rates don't really change that.
Makes sense.
So by acquiring SRS Distribution, Home Depot is gaining access to a huge network of professional contractors and expanding their product offerings. This allows them to tap into a revenue stream that's likely to be more stable.
It's a smart move to diversify their customer base and rely less on the DIY market, which can be pretty unpredictable at times.
Absolutely. It shows that Home Depot is being proactive and adapting to the changing market dynamics.
It'll be interesting to see how this acquisition impacts their bottom line down the road.
Agreed. Now, before we wrap up our deep dive today, I wanted to circle back to a theme that's come up several times in our conversation: the impact of Donald Trump's return to the political scene.
It's definitely been a major theme. His return has injected a considerable amount of uncertainty into the global economy, from energy policy to trade relations, and even the decisions being made by the Federal Reserve. His presence is being felt across the board.
It's inescapable, and this uncertainty is manifesting in various ways: market volatility, investor anxiety, and a general sense of cautious anticipation. Some people see this as a time of opportunity, while others are more apprehensive about the potential risks.
It's a powerful reminder that we live in a deeply interconnected world, where political events can have far-reaching consequences for the global economy. Understanding these connections and being able to anticipate the potential ripple effects is crucial for successfully navigating the financial markets.
I couldn't agree more. It's not just about understanding the headlines, it's about analyzing the underlying trends and thinking critically about how these events might shape the future.
That's a great point. It seems like we've covered a lot of ground today, from oil pipelines and electric vehicles to space stocks and the Federal Reserve. It's been quite a journey through the world of finance. We've really seen how even seemingly unrelated events can have these ripple effects across the market, like a political election or a company switching stock exchanges.
Yeah, it's all connected, which just highlights the importance of staying informed and being adaptable.
Definitely. So as we wrap up this week's deep dive, is there a final takeaway you want to leave our listeners with?
I think the biggest takeaway is that we're entering a period of real uncertainty. Trump's back in the White House, and that's created a very dynamic and unpredictable landscape. It's still too early to say for sure what his policies will be and how they'll impact the global economy. And that uncertainty is making a lot of investors nervous.
It's a good point. Maybe now's the time to be a bit more conservative with investments and really do your research before making any big moves.
Absolutely. Diversifying your portfolio is always a good idea. Staying informed about global developments is key. And be prepared for some potential market swings.
So the key takeaway is to stay adaptable. Keep a close eye on the markets, and maybe keep some ancids handy.
That's a good one. Remember, volatility creates opportunities as well as risks. It's all about staying informed and making informed decisions.
Well said. Thanks for joining us today for this deep dive into the week's financial headlines. We'll see you all tomorrow morning with new headlines from major financials magazines.